every time of a company requires kind of different framework. And I think the challenge is always to understand which one is the right framework at the right time. The best thing for us was to grew strong in our both market where we were already operating without sustaining another J curve to open a new market. Rather than country, we focus on product expansion for the last 2-3 years. So now it's a point of maximizing the commercial opportunity given by the new verticals, which for us are brokerage and pension. And from a growth perspective, we can start rethinking how to look at different markets.
The expansion right now is definitely is not to start in a new country, but probably to partner with somebody, and maybe the partnership can evolve in an M&A. There could be one by the other or vice versa.
You know, M&A is one of the things that as a startup you really don't think of, but as a scale up, I think it's a different, it's a tool, it's a lever that you have for growth.
In my experience, in 25 years experience, there has always been this, I mean, there is this moment where, we have to take a kind of strong decision and try to do something different. And this is the decision. If you take the right decision, then you scale.
Giovanni, would you tell us all about Moneyfarm?
Yes, absolutely. So we are a digital wealth management. So our mission is really to make finance more simple and accessible. And we are there to create a platform that supports them not only in the execution of the trades and investment, but also in the decision making. So advice, discretionary management. We run about £6.5 billion now. As you said, the main market is Italy and the UK. And we've been partnering with the United Ventures since almost more than 10 years now.
Giovanni, you founded off obviously in Italy. You've then moved afterwards to the UK and had that as your second market. Let's talk about first the decision to build in Italy and what it was like to first break out of Italy as well, so to say. So what would you say that's important to learn from our audience when it comes to building in Italy first or in your home market first, and then going to a big market like the UK?
Italy is one of the most expensive market for investment managed product. It's a huge market. It's a huge pocket of fees. So there was a huge opportunity for disruption. And being local, we have the competencies, the capability to navigate the regulation, particularly in financial services where the regulation plays a very big role. You have to be able to understand the local nuances of the country. So starting from Italy for us was the natural choice, but we always had the view to build a pan-European business. I was living in London at the time, and I was commuting back and forth. So my view has always been we start in Italy, but because it's easier for us to start there, given the fact that we understand the market and the regulation better. But it was never the view of remain only in Italy.
And I think, Giovanni, this is the key message that we always try to transfer also all the founders where we met. Italy is a big market, so you can really start there, but you have to have the ambition to scale, outside. And for the Italian founders, it's a sort of a very challenging kind of mindset to get, because if you're in Holland or in a smaller market, you start, or in Sweden or whatever, you start with the idea that you have a global market to address. While if you start in Italy, you can have the idea that that you have the Italian market together. And sometimes you need to understand that yes, the Italian market is big, but it's not big enough if you want to really build something strong. So you need to have this mindset that Giovanni had at the time, just to start there because it's a big market, but with the ambition to create something that can go behind the Italian barrier.
And I think, Andreas, the other point about Italy, Italy is a cheap market to start, because the reality is that the talent is cost less. So there are more infrastructure and bureaucracy to a degree, but your ability to set up and launch a product is probably easier to do that in Italy with less capital than it would be in London or definitely in the US.
I'd love to now turn a bit to that decision to scale out of Italy, and thus, could you talk to the audience a bit about how do you make that decision that now is the right time? What do we see? How do we try and help founders think about this?
So our decision was taken at the point where there was a convergence of we need more capital, we want to have a more friendly regulator, and we want to continue to, move forward with the vision of being pan-European. So we kind of put the three things together. As Paolo said, one of the structural problem we have at the time in Italy was that it was very difficult for Series A, Series B capital raises at the time, something that today is slightly different. So to raise a Series A, we decided to find a UK investor who allow us to an open operation in the UK. That was pre-Brexit. So of course, the UK at that point was also a more friendly regulatory environment. You can export back into Europe. So I would say there was a contingent of things that put it together made sense. And we kind of took the opportunity to do that by the fact that the virtue of having two, three things that were coming together at the same time, and leverage a fundraise to effectively sustain the story of expanding international.
Paolo, maybe you can then kind of try and abstract this a bit to how you see founders thinking about it today.
Something at a certain point, which is a tipping point. So the company needs to do something different from what it was doing. We needed to enlarge, the potentiality. And also we needed to discuss internally, between shareholders and founders, how to do it. In my experience, in 25 years experience, there has always been this. I mean, there is this moment where we have to take a kind of strong decision and try to do something different. And this is the decision. If you take the right decision, then you scale. And that was that moment in 2015 or 16. 15, just right before breakfast. And so in the story of Moneyfarm, I think this happened two times. So the first time was the 2015 with this sort of shift from Italian co-investor to international co-investor, and then the second I think moment where the company did it's not a pivot, but enlarged the market was when we thought about not only the B2C proposition, but also incumbents, and then let's say the B2B2C or the B2B proposition.
I would say your vision is to be pan-European, but you're not one of the truly big behemoths that are everywhere yet. Could you talk a bit about then how do you go about capturing the rest of Europe?
I mean, going back to the decision point, we also were in Germany, for instance. We decided to went out in Germany after COVID. So every time of a company requires kind of different framework. And I think that the challenge is always to understand which one is the right framework at the right time. From 2 years ago, there has been a big push where capital became from relatively cheap to relatively very expensive. And that, I think, forced us to change the approach to scale and growth, which I think we did actually quite well, because in the end of the day, we managed to move from a loss-making business to a profitable business in 24 months in a sector which is complicated because you have a lot of infrastructure that you need to support. So fintech in that sense is different probably from other places. But going back to the framework for decision making, that was informed by the fact that at that point in time, the best thing for us was to grow stronger in our both market where we were already operating without sustaining another J curve to open a new market. Now that we are done that, because we're profitable, we're in 2 countries and we're more at scale, now is probably the time to start discussing how do we go back and thinking about expanding in other markets.
Let's double click on the going from a scaling mindset where profit loss is not a problem to what I think a lot of companies went through in this period is going back to default alive, which is definitely a better position to be building from. I'd love to hear, how did you go through this? Making that decision, I think to everyone, it became clear that, okay, we got to make the decision. So that was forced upon us. But how did you go through that process? What happened both inside Moneyfarm, but also, of course, in the board with you, Paolo?
Yeah, I think, listen, from my perspective, it was relatively clear. So, when you have 2022 where interest rates went up 400 basis points and, we work on the market, we manage money. So we are, of one of the things that we are lucky is that we see this every day on Bloomberg when we wakes up. So it's like we are very close to that pulse of the capital market. So for us, it was really easy to understand the signal saying you guys have to adjust. The more complicated part is actually do it. And then, at that precise point, making the decision is very easy. The more complicated thing is executing on that decision.
I mean, at the end, is always a matter of the convention and the ability to to drive that decision into executing and in fact in the company, to have the right people for doing that kind of path. And so I think it's always important to have a very strong communication process inside the company, that everybody has clear that we are going in that direction and not in other direction. And I think this worked pretty well in Moneyfarm at the time. Well, that was the first 2-3 years. Let's try to see if this is going to crack the market.
Yes.
Or not. But then when we made it, then of course we need to raise money and manage money in a different way just to grow. And
I also think, Andreas, we were a bit, let's say, the blitz scaling kind of concept came a bit later than when we started the business. So that approach of building businesses was not possible for us in 2012 in Italy. That just wouldn't have worked.
We try to do investment with with people that have this kind of ambition and mindset to become international.
We now described how you've gone through the refining profitability after the SERB era, and you described earlier, well, we grew from Italy to the UK, and now we're in the UK. We've done very well in the UK, and we're now scaling across the rest of Europe. Let's talk about, because you described it, right, that this is the next stage that you're starting to figure out how to do. So what are the questions you're asking yourself now? And maybe you can describe a little clearer to everyone, where exactly are you on this journey? You spoke about Germany before as an example.
So I think we are, at the moment we are submitting in the UK. We reach profitability in both countries. So the fundamental point for us was that to get them to have a competitive mode in both countries. In the last few years, we really focused more about product expansion. So we saw a convergence between our traditional, let's call it robo-advisory business. So the point about we manage your money, we advise on your money, to also being a fully fledged investment platform with brokerage trading and other products. So rather than country, we focus on product expansion for the last 2-3 years. This cycle, I think, is almost completed. We have completed almost the product expansion where we want to be. So now it's a point of maximizing the commercial opportunity given by the new verticals, which for us are brokerage and pension. And now I think from a growth perspective, we can start rethinking how to look at different markets. Different markets, is a very different things from, starting 10 years ago, whereas there was not the product category. Now there is the product category. Most of the market have their own players. The playbook is probably going to be very, very different, and it probably relate to consolidation, to M&A if there is opportunities, or to identify niches where we really have a moat, we can compete compared to other existing player in different markets.
In this market, but happen in a lot of other markets like this one. I mean, there is one point that have to be consolidated. So there's going to be company that's going to buy other company, and company have to be bought by other company. So at the end of the day, the expansion right now is definitely not to start in a new country, but probably to partner with somebody, and maybe the partnership can evolve in an M&A. There could be one by the other or vice versa. I do believe this is going to be the future, to create a pan-European platform. But of course, two things. First, we needed to get to this positive cash flow, and that is important just to be very solid. Second, Giovanni and the team have to be focused on building the product and improving the product. And then we have some strategic board where we try to understand if there are those, if there is the right time to get to those opportunity, or if we need to wait and maybe understand if the opportunities should be in down the road in months or maybe a couple of years.
How do you prepare for this as a founder, Giovanni? You know that the next step of the journey is one that you have not been on before. Consolidation was not how you entered the UK. Could you talk a bit about how you as a founder grow through this?
Yeah, actually, we did a bit of consolidation. So we bought 3 companies, or let's say 2 companies and 1 book. So I started doing M&A in 2023. And again, this was opportunistic because the reality is that I understood that growth was harder for our sector in 2022 or 2023, given also by the market dynamics. And a way to unlock capital is through M&A. So in a sense, you can, if capital is scarce, M&A helps you with that because it allows you to better define the return profile. So in our product expansion, we bought one of the vertical, which was a pension consolidation business in the UK with about 1 billion in asset. There was always a decision between we buy or make the new product line, and we decided to buy one. And we did it in 2022/2023, where the opportunity for buying asset was actually probably very good. So I think we have this playbook now. So we have now done, as I said, 3 transactions. So it's definitely a muscle that we've built over the last few years. And in that sense, I feel I can, if we decide to then look at the European, I can definitely execute on that.
Can you expand on that playbook? I think it's something that everyone in the audience are very interested in understanding better.
M&A is one of the things that as a startup, you really don't think of. And I think it doesn't make sense until you have a full-on product market fit and you are solid with your core business. But after that, as a scale up, I think it's a different, it's a tool, it's a lever that you have for growth. And of course, founders, we prefer organic growth by nature is better, and by all means is more rewarding. But M&A can accelerate things, and particularly in a business where scale matters, which are mostly businesses, to be honest. The ability to execute on M&A can allow us to move faster. I didn't have an M&A background, but I was always exposed to M&A also in my previous life in banking. It came, I wouldn't say naturally, but I started looking at it very, very closely when I was looking at product expansion. So again, there is always a business reason. For us was expanding the product faster and get more scale in the UK. That the question is, how do you do it? So I think that I'm very agnostic on the how. Whatever works is fine. I don't.
You need to have the right people,
Yes.
at board level, but also in the executive in the company, because running through a M&A process is something that could defocus founders of the CEO of the company to the real business. So it's important to hire and to build the team that could manage those kind of transactions, because of course then you have advisors, you have lawyers, you have a lot of other people to manage.
It's expensive. Yes.
So if you are a founder like Giovanni that was already exposed to the M&A and he sort of doing this type of stuff, then he's able to. If you are not, then you need to have somebody that is sort of an M&A head for this.
Yes.
Because otherwise you get lost and you lose your hands on the real business, because an M&A process, it is very intense and it takes a lot of time and a lot of brain power.
Could you talk, Paolo, about how you as a VC actually manage, let's call it tail end processes of a portfolio, and how you deal with a company like Moneyfarm, which is performing super well? They're on their way to the next growth stage, but you are also kind of like promised LPs that we would also liquidate our positions at some point.
By the way, can I interject 1 second, Paolo, before you start? Andreas, the way you ask the question, I think it's, this is also a very European thing. I mean, selling is not a bad thing. I mean, it's part of life. And so I don't think you should be refrain from asking the question directly, because there's nothing bad with having a fun cycle, and eventually people will get their money back. We invest a lot of people for a lot of money, and eventually they need to buy a house, they want the money back. It's normal, and there's nothing bad with it inherently with selling. And I think this is a bit of a European mindset, then I would say.
Well, let's say that we do this job, which is also managing a portfolio, and so it's not just one company, and so the path of one company can be somehow hit by the other company in the portfolio. So in our case, we have a very good DPI. We have done already 3 very good exits. So the fund, the portfolio doesn't really need. We don't need to do this to sell the company because we need to finish the fund.
If anyone in the audience didn't catch that exactly, what Paolo is describing here is that if you're invested by a fund that has not generated significant DPI, the fund manager will feel a stronger need to deliver returns back to the LPs.
But I agree with Giovanni. I mean, we have a institutional duty, to create a DPI, and so just going back to what we were saying earlier, the company needs the company probably will have expansion, and in order to do expansion, we need to raise more money and to create another, let's say, round or a potential deal that could be an exit for early investor and adding new investor in the company. This is something good. So we have done it in other company where we get at a certain point where the new investor came in with a different time frame in front of them and with a different pocket in the money to bring the company from 10 to 100. So we did a 1 to 10, and now they're going to bring the company to a different pace. And this is pretty natural.